lady from Punjab. She called me. She said, "My father passed away. We need some. We've been given some tax advice by a solicitor, but we've been advised to take a second opinion from a tax specialist." I said, "Okay." So they basically, their father had a stroke, owned 15-20 properties. He had a stroke and went to see their trusted family solicitor about inheritance tax and what do we do now, because everything was owned by him. He said, "Well, I've got a solution for you. We do a backdated deed of trust, backdated by 25 years, when he initially bought the properties, and we'll say that these were given to the daughters 25 years ago. And all your problems are gone." So they did that.
Only 24 now.
Okay, and they did that. They formalised it. They legalised everything, and this witnessed everything. Was signed. Unfortunately, the dad passed away after 3 months.
7-year-old.
Okay, so what they did with that was, when they did the deed of trust, they immediately transferred all the properties to the daughters' names. So all the properties were transferred from dad to the daughters at that time, whilst he was alive. Dad passed away, and they were doing his probate. Somebody said, "Take a specialist opinion. This doesn't sound right." And she said that to me, "We've got this backdated deed of trust." I said, "Well, it doesn't sound right to me, because you can't backdate. Otherwise, the daughters will have to pay income tax for the past 25 years. Anyway, the conclusion was that you cannot do that. So what were the consequences of what had just happened? That's the interesting part. And what I had to break it down to, or break the news to the family, three women in their 30s, 40s, and their mother in the late 60s. It went something like this. When your dad gave the properties or transferred the properties into your name, he triggered a capital gain on which he was subject to pay capital gains tax at 28%. Step 1. Okay. Step 2, he died within 3 years. He died within 3 months, actually. But the 7-year clock, which most of the people know about in this room, you have to survive 7 years after you gift something. After that, you don't have to pay tax on it. So he died within 3 months. He has to pay 40% in inheritance tax on those properties. 28% capital gains tax, 40% inheritance tax. Okay? Now, for the daughters to pay their father's capital gains tax and inheritance tax, they came to me after about a year and a half after the father passed away. They had to sell their property to pay father's inheritance tax and capital gains tax. But because the property prices had gone up since their father gifted the property to them, they had to pay capital gains tax before they were left with money to pay their father's inheritance tax and capital gains tax. So when I did the calculation, effectively they lost about 67% of their estate